Good morning and welcome to the Market Carver. I hope you had an outstanding week. Great Memorial Day. I know some places got some rain in some areas, a little cooler than we'd like. Kind of feels like the beginning of May, not the not the end of May, but nonetheless, we hope you had a wonderful weekend. Much to talk about in this crazy market. Starting to retreat a little bit of 3 to 4%. I put this out in last week's Market Carver, but just in case you missed it, at least I think I did. Just in case you missed it, we've had some interesting things. We're at all sorts of records. For the minimal amount of short interest, which we've not seen back since '07. I should say a record since 2007. Higher short interest is actually shows there's room for a market to be able to go up. Low short interest is a spooky place. We've also got the massive amount of margin interest. If it's not for shorts, that means people are long or have borrowed against their portfolios. And we know that old rule: markets can come down quicker than they go up, and that's just the way that it tends to work. So we're very much on watch for what's going on right here at this juncture, and we'll continue to just update you on the things on the Market Carvers. Earnings seasons fundamentally have come out. I guess you have to look at it and make the story from it that you want. This chart obviously tells the story the way that we look at it. You had 73% of the companies beat expectations based on earnings. That was good news. It went back to where it was the beginning of the quarter, even though analysts had pulled off. The earnings beat was good. The problem was the revenue was light. Only 44% of the companies in the S&P 500 beat on revenue. Essentially what that means is we're continuing to make profit based on the contraction of cost. People won't work for zero. Eventually that will lead to a problem. We've got to watch it very carefully. The technical leg, Ned Davis is a gentleman who's got a track record in following the technical analysis. He's one of the people that Andrew and Larry both study. Very interesting things. And he's got a proprietary sentiment indicator. And the bottom line is it's a contrarian. Meaning, essentially, when it says positive, think negative. When it says negative, think positive. An old Warren Buffett-ism, if you would. Buy when the market is scared, and run when the market is full of greed. The sentiment indicator says when we reach these levels that it's time to be very careful and watch out. Jeffrey Goodluck, interesting guy. We watched the institutional leg. His bond fund now has over $60 billion inside of it. But he is doing very well, made bets on emerging market bonds, some of the places that we happen to be in. His whole portfolio obviously is aimed that way. He probably will be named the investor of the year at this rate if things continue to work out for him. Been very wise in some of the calls, and that's why we pay attention to some of these institutional legs. We want to go with them when we can and make sure that we don't get ran over by their behavior when things are going bad. He is one of the people that seems to have made a lot of sense so far this year, and some of the things that Adam and I have worked on have agreed very much with where his portfolio was and the direction that it was going. Naturally, our hearts still go out to the people in Oklahoma City and more especially. Tough time, but I want to remind you again that when bad things happen, we've got to make sure that we're making the best use of our capital. A lot of people are saying, hey, how do we support? How do we send money? If you're going to send little checks just in support, that's one thing. Remember, appreciated stock, we can make those gifts, obviously not out of IRA accounts, but out of retail accounts, we can donate appreciated stock. We don't have to recognize the gain on your tax return, and the charity still gets the full benefit of the asset, and they'll convert to cash. They don't have to pay taxes as a nonprofit, and you get a full deduction for your 1040 on your tax return. So let's be smart with our capital. You always want to gift appreciated assets when you can for a charitable contribution, and you always want to take the loss to recognize on your return if something bad has happened. Sometimes I hear people say, Joe, I don't want to get rid of Apple, or I don't want to get rid of this stock or that stock. Remember, there's a lot of different shares, right? We can transfer out some of the Apple where we've still got huge gains that are inside of it, transfer out some of the Apple, take money today that we would have given to the Red Cross or some other entity, and buy stock back today. All that does is adjust our tax basis, and that works very well for the return, at least for planning in the future and giving us some options. Rules to live by. I'm not sure we can ever get any stronger on this one right now. That the market and the economy are two vastly different things. There are more and more people who are walking in saying, Joe, this economy is for real. Well, maybe it is for real. Maybe the QE actually worked on getting the economy to be stimulated, and the market went along with it. Just remember, the economy can continue to improve from here, right? Or stay flat from here, or make people feel better from here. And that doesn't necessarily mean that the market is going to work in a positive direction. Markets do have cycles, and they have to go through that kind of like a salmon going up the stream. So pay close attention to the things that are going on. If we get a reasonable size pullback, not unlikely, another 8% or so from here, I think we'll find out which direction this market is really going to go for an extended period of time. So stay tuned, watch for that. Families, there's lots of stuff that's going on out there in the world that gets left over and not paid attention to in the legacy planning conversations that we have. It is worth making sure that our beneficiary forms are filled out correctly on the 401ks. Obviously, we check the things that we have here, but you might just want to make sure your beneficiary designations are up to date. One of the last reports that we saw that came from, I don't believe it was the Department of Labor, but it was another organization that takes care of beneficiaries on retirement forms, believes that as many as 68% of the beneficiary forms are filled out incorrectly, many with beneficiaries being deceased people. So let's pay attention to that, make sure that they're up to date and we're on the right path. Hey, if you're out and about on Saturday mornings, don't forget to catch the radio show, WQME, that's 98.7. Sunday mornings, it's 10 to 11 on Shine 99. And you can always find the newspaper column as well as the radio show if you just come to the website at yourlifeafterwork.com. Hey, we appreciate you tuning in. Have a wonderful week. God bless. We'll see you again soon.